Hey, good afternoon, everyone. Good evening. How's everybody doing? Hello, Doll. Doll, you should have sound now. It should all be working right now. Okay, cool. Hey, Ed, thank you. Good deal. Hey, Carla. Hey, Mike. How's everything going, everybody? Gilbert, welcome. Thank you very much for being here. For those that don't know, that may be new, my name is Rick. I run the Hit Run Candlesticks trading room, and today's date is Tuesday, November 14, 2023. Hey, Malcolm, how are you? Hey, Bobby. How's it going? All right, let's get to business here. I apologize. I've got a smudge on one of my glasses lens. I'm going to try to get it off. Well, I just thought of something kind of funny. Maybe that wasn't a smudge. Maybe that was a great big bull. No, it was a smudge. Bull's backing down, folks. How are you? Hey, Walter, Fred, Emma, Julie. Glad to have you guys all here. Thank you so much. All right. Wow. I have to tell you that today was not expected. Man, battles, smudges. Yeah, smudges and losses. Yeah. Today was not expected, not at all. At yesterday's close in the trading room, I kind of put out there to everybody, what do you think? Up or down? I think it was on a different chart right there, above maybe the these highs in here. Some folks said higher, some said lower. And, this just was not expected. Holy moly. In my wildest imagination, I wouldn't have thought that we'd gapped up like this. So, unfortunately, what that does is that ruins the day of trading for me personally, because we gap up away from everything and we put ourselves in such a overbought condition, just don't want to chase anything. And it just makes sense, even if you bought something, or even if I bought something, at a super good, I'll call it a good entry, a good looking chart. The problem is if the market wakes up tomorrow morning and realizes, holy crap, what did we do? Smoke the whole joint? Did we drink the whole bottle? Did we eat the whole cake? Either way, we're going to feel bad the next day or the day after. And you know what? We might scoot back up. In fact, I said in the trading room today, toward the end of the day, I wouldn't be surprised if we don't pop up a little bit more. But I got to tell you, we have a date with a pullback. We're just a little bit overextended. So be very careful going forward here. I mean, even if we, whoops, it's not what I wanted to do, but we can do that. Even if we showed further strength and it just kept going, just the higher you go here, please be careful. Because somewhere around here, the string's going to break and then we're going to come back. Not anything bad. I don't think anything bad. I think the bull's in town and I don't believe the bull's leaving. Certainly not this year. I do not believe the bull is leaving. And if we have something like this, I'm still bullish. Okay? I'm still bullish. That's still a very bullish chart. We can certainly put on some shorts if we want while this moves down, simply follow price action, or you simply wait patiently until the bull gets out of the cafe and gets back on the street. Let him come back in. That's what charts do. Nothing changes. From the beginning of trading years ago till the day that trading stops, if it ever stops, it will always be the same thing. Nothing will change when it comes to this. Nothing at all. Charts will move up. Charts will rest. Charts will move up. Let's see here. Let's come over here. Charts will move up. Charts will move down. Nothing changes. Not ever does anything change. So to think that we're not going to pull back is just, well, that's just not cool. All right. So let's be real cautious with that. What else have we got here in the market? IWM was a great big winner today, and that's the talk of the town, it seems like. IWM has fooled us before. IWM's not going to fool me. I'm, you know, my indice of choice is the SPY. I'm going to stick with that. And IWM has popped up before. It's made everybody bullish, and it crumbles. So this is one chart here that's going to have to prove itself to me, and proof will be if it can break out over just about 200 up here. Everything from here to 200, everybody go knock yourself dead. You know, you can chase IWM, you can look at the small caps. It'll be talk of the town on every radio and TV show you hear about. But I'm not going to believe little old IWM there unless we get over 200. And then I'll be a believer. Then I will be a believer in that. And you can see how that will just wake right up. But not till then. So careful with this little guy here. It'll give you false hope if you're not too careful there, okay? All right. Tonight's topic, and please, everybody jump in, ask questions. You know, I hope somebody takes something away from tonight. I don't know. I hope it, you know, makes you think a little bit. What I did have planned tonight is not necessarily completely everything we're going to talk about, because I wasn't expecting this big move up. And what I was expecting 100%, I was expecting to be able to pull up T-line bounces all over the place and have some charts that we could really look at and take some action on over the next 10 days or so. And boy, did I get beat up on that one. So we're gonna still talk about the whole T-line bounce thing. We're gonna do that. We're gonna talk about the T-line. I'm gonna also show you something else, how to straighten the T-line out. I don't know. Would anybody like that? Would you like to know how to straighten the T-line out? The T-line is the 8 exponential moving average. It's probably between that and the pinball setup, they both came alive at the same time. And if it weren't for those, the T-line, the 8 EMA, and the pinball setup, I would not be here today. I honestly believe I would not be here. Yeah, I wouldn't be trading. So they saved me as far as trading goes. So they're pretty near and dear to my heart. We're not going to talk too much about the pinball. I have no plans to talk about the pinball setup, but about the T-line, I like that. And the whole idea tonight was bouncing off the T-line, kind of like we did right here. Anything about the T-line is of interest. Anything about, let's see, I'm trying to figure out this question. Anything about the T-line? Oh, I see what you're saying. I wasn't reading it. I wasn't emphasizing it right. I agree, Frank. Yes, absolutely. So let's take a look at a couple. I've got some charts here. Let's take a look at space, okay? I like the way space is setting up. Now, something called, what chart was it? We can look at Microsoft, okay? There's something called a T-line run. And a T-line run is when price is over the T-line here. Let's see, is that a cleaner chart? There we go. When the price jumps over or just is on top of the T-line, the black line, and it stays there for multiple days. I've never put a number on that. For fun tonight, let's put 5 on that, okay? So we've got 1, 2, 3, 4, 5 days. 5 days would be a reasonably good swing trade, I think. So if we did something like this, you know, if you had an entry maybe in here or, you know, maybe right there, then you've got 1, 2, 3, 4, 5. Well, the 6th day, it's pretty common, actually. There's a good probability the higher you go, and we're just going to put the number 5 on it. There's a reason I've never put a number on it, and that's because I've never found a number that made any sense. There was nothing that was consistent. It all had to do with the attitude of the market overall and that chart overall. You like 4 to 7? That works. That's a good number, CJ. Good number. So, let's just pick 5. So if you look at this, that would be a good swing trade. That would be a good place to maybe start thinking about taking some profits. Definitely tightening up on a stop or something, just on that 6th day, 5th day maybe. Maybe that 7th day. But you can see that all of a sudden we keep on going. So let's put 5 up there. Anything over 5, we're gonna call that a T-line run. This is the first time in the T-line has been around, I think, for about 30 years, 29 years maybe. This is the first time I've ever put a number on it and talked about it this long at any one time. So I wouldn't be surprised if 5 sticks, or maybe 4 to 7 actually. 4 to 7. Yeah, but yeah, 29 years. 29 years. First time I've ever talked about actually putting a number on it. So anyway, that's called a T-line run. That actually is a swing trader's dream right there. That's a dream chart. Yeah, that's just a dream chart right there. And that is what we would like to accomplish overall. So if you look for those bounces, or reversals, because I'm going to talk about another little pattern that is sort of a reversal off the T-line. And Microsoft is doing it right now. It put in that reversal. I'll show you that in a second. But that's a T-line run. I want to burn that in your head right there. Burn that in your head. Don't go tattoo it on you. Just burn it in your head, okay? So the reversal pattern, and something you're going to see a few of tonight, are charts where price is actually below the T-line. I don't care where it is below the T-line. It could be below here. It could be below the T-line, above the trend indicator. You can dial that in however you want. What I'm looking for is below the T-line and back above the T-line, like that. What I really like is something like this. Whoops, get my tool out. Tool, arrow. Sheesh, there we go, arrow. What I really like is, let's call this the T-line right here. And here, actually, we can use, we'll use these. Let me see how I can draw this. So we're maybe above the T-line like that, and then boom, we fall below, and then you can put, a couple candles, maybe 3 in there. It could be even more, as long as they don't, run down here. And then what we want is, oh, there we go, back up. Well, that's pulling momentum back into the chart. Think about that. Think about what just happened right here. You've got all those dip buyers, buy it, coming in there. And it doesn't work out every time. The whole T-line run is not, believe me, it does not work out every time. You might only get 3 or 4 days, 4 to 7 days up like that. And then you also may get those extra days like that. That's a swing trader's dream right there. Right there, swing trader's dream. So that whole movement here. Now through here, what's going to happen is, let's see here. Here we go. What's going to happen is you'll see some tails on these, and this may even move all the way down like that. I probably shouldn't have drawn them so high like that. But you're going to get these little dips to the downside. And you can even look at Microsoft here. There's a little tail in there, tail. Now those never came down to the T-line, but if you see that, that is what I really want. If I need to catch it, if I can't catch it here, these right in here, the sellers took it down, the buyers are bringing it up. That's just a sign that the bulls are still very, very, very interested in this chart. So now let's go look at space. Sorry, I'm kind of a space cadet. So if we look at space, look how space took off. And I mean, and here's a trader's 101 tip. This should be a hands down. Burn this into your brain. Don't tattoo it on you. Just burn it into your brain. The first time we come off of just about anything and you run into a major moving average, it is a no-brainer that there is a super high probability there's a pullback. Now, this is certainly tradable right here. We have a scan. We like to trade that move right there. But believe me, the 50-period moving average is a profit zone. It's not a be a hero zone. It's a profit zone. So just like I say, take it to the bank. Bet on that pullback. Now, that pulled back a little bit more than I would like for a T-line bounce, okay? But what about for that reversal? Look how we closed below the T-line, immediately right back up. What does that tell you? Look at that trend. Little trend here, a little bitty thing. And then the sellers got a hold of it, down. And what happened? The buyers just took it right back up. And, you know, we start moving sideways here. Now you can see that T-line bounce in there. How we come in there with the T-line, the tail, T-line, tail below, and then back up. You know, inside the day, or it could be open and then close up like this. That's just a sign of a really good chart. Now, I don't want anyone here thinking that I would have said yesterday, today we're going to gap up like that, okay? I don't want anyone thinking that. I had no idea we were going to gap up like this today. So I'm not trying to show off charts, see what could happen here and a big gap up. Today was an oddball day. Today is not the norm. This is not the norm in trading here today. So there's going to be a lot of charts out there that's up, and you know, don't think that any chart pattern would have found such a thing. Not at all. I do want to share that I think that is a very strong chart pattern. Yeah, that's a Fig Newton pattern setting up as well. So speaking of that, anytime you can put multiple chart patterns together, that's a benefit for you. So here we have an overall trend. Okay, the T line is rising. Trend indicator happens to be rising. That's cool. We have this consolidation, and in this 3-bar consolidation, you have an open body candle, closed body candle, open body candle. That's a Fig Newton chart pattern. That is something we consider at Hit and Run, Right Way Options, and BYOB Trading, a bullish 3-bar candle pattern right there. Buyable on a breakout or buyable inside day, something like that. So anytime you can put multiples together, that helps you. Okay, I think this is a good chart to what? Oh, I know what I was doing wrong. I kept going over here, but it's not here. I think this is a good chart to maybe look at and sharing with you how to straighten the T line out. Now, what I last week, 2 weeks ago, something like that, I was working with somebody doing a little coaching, and they had a problem because the T line is so choppy. It is, and it can be choppy. You know, you can see the breaks in it, and he asked me if there's any way to straighten it out, and I said, yeah, there is. I'd forgotten about doing it. I said, yeah, there's a way to straighten it out. You can straighten that little booger out, straight as a board if you want. And you know, I pulled up this line like this, and there you go, right there. Just straighten it out. No, I'm kidding. Now, I'm not kidding about that. I have a way to actually straighten it out. But I did this. I really did pull up this line like this. And I said, well, you know, you could do this. And I do this often. You'll see me in the room. I'll put a trend line not on price, but I'll put it on the T line. And what I'll do is I'll find a bottom somewhere, a break in it. You know, in this case, here we're down and we're breaking up. And then I'll come up at the top somewhere. Usually I'll do it like that. I don't usually go to the top of it because I don't think that's right. I think it's better to find as much meat as you can as much meat as you can, and just lay it. And I usually lay it just ever so slightly below. I mean, even touching it. I try to get it as close as possible. So that kind of straightens it out for me. But he did remind me I really do have a way to straighten it out, and this might be a way right there. That brown line right there, that straightens it out a little bit. And you can see the way I did it, freehand is a little off compared to this. You can kind of, use what you want to use. You're still going to have to bring this line out, and in this case, I would just lay it on there, and that gets you the extension. So if we're looking at space here, it is very, very common for charts to do this right here. Okay, very, very common. I mean, we're talking like stupid common. Okay, in fact, this probably walks right into our favorite chart pattern entry of 3/8 trap, something along those lines. And what happens is you have something that's bullish and then it rests or pulls back, whatever you want to call it. But there's this consolidation in here, and then it continues up, and then you get this consolidation, continues up, same thing. Well, there's a really good chance if, I think there's a better than good chance. I actually think there's 100% chance that this is going to happen, okay? What I can't say 100% is it going to start tomorrow. I can't say that. I can say that there's 100% chance that's going to happen. And it may start happening tomorrow. It may run up another couple of days maybe and then start happening, but I guarantee it's going to happen. Absolutely guarantee it. And when it does, that's what I want to shop for. Now, if you put this line in here and you just extend that, you can just follow the T line up, and that might give you an idea where it's going or what it might start to do at some point. So we may certainly move up. I mean, we could move up another day like that before we start that moving back. And then what we're going to watch for is, is it going to walk just sideways, or are we going to walk down? Bottom line, I want it to come to the T line. I don't too much. I don't too much, Al, but there's a whole, in live trading alerts, there's a whole, I don't know, there's 5, 6, 7 maybe of linear regression trades, basically the kind of the same theory that I'm looking at here, the same thing. But I wanted to share how to straighten it out, and you saw it. It's just linear regression is what it is. Now, the thing about it, we'll look at some more charts with this on there, and I'll put the T line up now on this chart. There's the T line right there. Okay, so it's just a way to straighten it out, because sometimes the T line can get a little wacko. It really can. We moved up today. Look at that move today. And the reality is, if we just put an inside day in, then what's going to happen is the T line is going to move up higher and move further away from its linear regression line. However, the linear regression will ever so slightly follow it, but it will put that, a larger space in there. It just, like I say, it was a couple weeks ago. The gentleman that I was working with brought that up, and I had forgotten about it. And I told when he asked me, and hey, actually there is a way, and that's what we did. So he's a happy camper right now. So let's see, linear regression of the T line. Here, let me show you that right here. So we're using the data source instead of the main chart. I'm using the T line. So I want to know what the linear regression is of the T line, and it's just a way to straighten it out is what it does. Okay. So 12, I've got 12 on there. you know, you could put 18 if you want, and really you could. And if you, let me get rid of this now. So if you're looking at this chart, if depending on what type of swing trader you are, and what I mean by that is really how tight you are. How tight you are. How you know, how much risk can you handle? Because as we start moving up, this is a brand new pop to the upside. So you've got to realize back here, the linear regression was down. I mean, if we took this and went backwards longer, you're getting more of back here. And you see that linear regression is down. We're still doing the linear regression of the T-line. Nothing has changed. But if you start bringing in all this bearishness, it's going to change the direction of that regression line there. So you've got to remember 13, 12, whatever you want to use in there. You want it to be moving up. But I guess what I was going to show you is if you take it out 17, 18 days, basically make it sort of flat. I definitely want it angled to the upside. But you can see here that we could actually come below the T-line and we're still above the regression line. So somebody might look at this and say, well, right now, my stop is going to be the regression line. I would have a hard time arguing with that, even if it was below the T-line. So that is definitely, and that's what this person is, gentlemen. That's what he's going to do, because he doesn't like the T-line. He loves the T-line, but he doesn't like the T-line because he can't make sense out of it, because to him it just moves around too fast. So he wants to straighten it out, but he wants to trade the whole T-line theory. So this is what he's doing. And I got a note from him yesterday, I guess. He loves it. He loved it. It's taken him a while to get comfortable with it, but he loves it. So anyway, it's just an idea. We'll look at this on some other charts as well, okay? Let's see here. All right, let's look at some other charts. Let's take MGM, and I'm going to come back over here because this is the chart that I look at during the day, and we'll go visit that other chart. There we go. So MGM, see how we're bouncing off the T-line. This is the kind of stuff I want to look for. I want to look for charts that rally and we get this bounce. And this bounce can be 3 or 4 days. It can be 1 day. But it's all part of momentum. It's all part of strength. If that chart can stay, and this is what I didn't realize it in the very beginning years ago of the T-line. It was a few years, maybe not even that long, actually. Let's see, green. There we go. That when we popped up from wherever or down and then bounced off the T-line, what would happen was that price would come back and visit it. And this is where, you know, the whole T-line run, swing trader's dream came in, is when you get a chart that does this, I'm serious. It is just a sweet, sweet trade when you can do that. Now, I'm not one for holding it that long. You guys all know that. A lot of other people are. But I am one for trading it. So trade it, profit, trade it, profit, trade it, profit, trade it, profit. Rinse and repeat over and over and over. I am one for doing that. And what would happen is, you know, you're going to have tails on the candles like this. And the T-line price will, you know, which is it? Is price following the T-line or T-line following the price? Now, we know T-line, we know the price is actually the leader here. But it's almost like they work together. And it's like, tag, I can bounce. Tag, I can bounce. It's like a trampoline right there. Now, again, it doesn't work. It's like any chart pattern. It doesn't, it's not 100% proof. And there's no chart pattern out there that is 100% proof. There's no such thing in trading is 100% proof. But what there is a good risk-reward ratio, okay? So let's say, for instance, right here, man, you're hot to try. You're going for it. Boom, I'm long. And the next day, oh crap. Your risk-reward is so small, it's okay. I mean, unless you paid, crazy high. Like if you bought high on something today, that's crazy high, not going to be so good. So the risk reward of that trade is really, really good, in your favor, actually. So if you were to put the market in your favor, if you were to put the trendicator, I like the trendicator, not everyone does. I like that. I like the fact that the 3 EMA is over the T-line. The T-line is over the trendicator. That's my dream team right there. And so when you, and again, the market has to be in your favor. It has to be trending in your direction. So if you're bullish, say MGM here, then you want the market to be bullish, okay? By the way, the market is bullish, but it might be stupid bullish right now. So you might just be prepared for that little bit of a pullback coming. May not be tomorrow, but it's coming. That is coming. So as long as everything's in your favor, this is just a sweet trade. Just absolutely sweet, because the risk reward, and in this case, I'm not necessarily talking about price reward. I'm not talking about that. I'm talking about risk reward with the T-line in your entry. I'm talking about right here, not reward with money going up. Talking about this right here, okay? I hope that makes sense. Now let's come over here and let's throw that linear regression on there. Do we have it? 18. I'm going to change this. 18 is a little fast for me. 10 might be a little slow, but really all you're looking for is a trend. That's all. All you want is that is up. Don't overanalyze that. Don't get too in the weeds over it. It's moving up. That's all you need. Then, unfortunately, at least with TC2000, at least I don't know how to do it. I don't know how to extend that line right there. I wish they would. I wish they would give us a way to extend that linear regression. Well, there you go, right there. Now you've got that T-line, and now you've got something to work with. I've been at my desk here for a little over an hour before we started, just looking at charts, and I was making notes of, thinking things to talk about. One of the things I thought of was somebody's not going to like that. Somebody's not going to like that. Somebody's going to say, that's too tight for me. And there's nothing wrong with that. You can say that if you want. So the thing to do, this one, I don't know if I can do it to this one. Doggone it. I don't have this one set up that way. That's all right. We can, I don't even have the 17 on here. All right, here, let me make some adjustments here real quick. Won't take me long. There we go. Let's change this to this. Oh. Is that going to work? Did I change? Yeah, that'll work. So now let's take this linear regression. I'm going to change the data source to that. But boom, there we go. Check it out. So now, for somebody that doesn't want to use the T-line, but you want to use a slower moving average, that is the trendicator right there. Right there. And all you've got to do is extend it just a little bit. And that'll help you with, and when you think about it, if we pulled back, let me change the color of this. Blue. There we go. If we pulled back all the way to that blue line, so let's do this. Let's put this arrow up here, And let's pull back here. Let's do that. Now, what chart pattern do we have here? Oh my goodness, that's pretty. Look at that. I'm kind of close. Is that close enough? Does that work? Remember the chart pattern? By the way, all bullish chart patterns will do this. I want to capitalize A, capitalize L, capitalize L. All. 100%. 100% sign. All bullish charts will do this. So if you find a chart and if on the lower left corner, if you see the candle pattern, and if you see, or just use that as a starting point, and price is currently up here like this, okay? So let's draw a big line like that. If you see a chart and you look at it, or you look at it on your screen, and you back up and you say, man, I wish I would have bought it right here. And the chart's going to go up and down, up and down. It's going to be sloppy. It's going to be ugly. No chart is, well, that's not true. There are some out there that have been beautiful from the lower left corner to your top right corner. Okay. Now, if you say, that's the chart I wish I would have bought, I'll bet you a $100 bill that somewhere along the way, this happened. Multiple times. Maybe this is what, August to December that we're looking at. This could happen 5, 6, 7 times, 10 times. And what's going to happen here, let's see, let's use this color. Up, just like that. That's what's going to look like. Guarantee it. Absolutely 100% guarantee it. Now, it'll be more sloppier than that. I don't think it's going to be as straight lined as that, that's for sure. So you see what we're doing here? Let's make this really big. See how we're up? And if we come back to that blue line, look what we're doing. Now, I can't say that we're actually going to break out and move higher. I don't know. I'm no smarter than you guys. All I do is recognize chart patterns. I've studied charts way longer in my life than I should have. I missed out on a lot of good stuff. So you can go study charts, or you can sort of follow along. Yeah, but this is what's going to happen. This is what potentially could happen back, just straightening the T line out, or the trend indicator out, or whatever moving average you like, and then waiting for that, either that pop up or you're buying in there. But that's what those long-term charts look like. Anyway, so Frank, what do you have here? If the T line and the 3T and the trend indicator are all in your favor, but not the market, would you still buy? I still do sometimes, but if you want a higher winning rate, you want it all to be in your favor. You know, think of it this way. If you're trying to, and we'll go with MGM here. If you're buying MGM because you think it's going up, but yet the market is going down. Now stop and think about this for a second, okay? If the market is going down, that means 51%, 51% is against you, okay? Now, we do things like this. We look at LTA. Now this happens to be bullish because the market's bullish, but in this simple road to wealth trap, 93% of all stocks that's in here, 167, are 93% have open bodies on them. They're green. That's what that means. We have seen more times than we care to talk about, and I mean a stupid amount, where those numbers are switched. And over here, that is very, very red, and it's 93% red. So if 93% of the stocks have closed or filled bodies, and you're trying to go long, who do you think is bigger? Who's going to win? And I'm a big believer in real life and trading. I'm a huge believer. The person with the biggest gun wins, period. So who do you think's going to win this battle overall? You've got the weight of the market against you, and that's one big-ass gun right there. So, yeah, sometimes I take those trades. Maybe not the smartest thing in the world, okay? Maybe not the smartest thing in the world. So, anyway, I hope that was helpful. Okay, let's see here. Let's look at another one. Let's look at PLAB. Look at PLAB here. I'm going to come over to this chart. Look at PLAB here. PLAB is look how that thing went up and then went consolidated. We're back. I'm not going to ding up the chart doing this one, but look at that. There's our pattern right there. Every single time. It's what happens. It's what the market does. It's what the charts do. Come over here to the naked chart. Look how we straighten the T-line out right there. How sweet is that? That's actually a beautiful chart. Well, that's actually a gorgeous chart, I think, right in here. Not even talking about this, just right through there. What a great chart to be a buyer of. That's nice. So what we want is whether you're in an uptrend or anything, if we move up over the T-line, I wouldn't get too excited about that first move. I really wouldn't. Something I learned long ago was the first move is not the move I want. Really, this is not the move I want. One, this is the hardest move in the world to catch. This is horribly hard to catch. You've got to have a lot of tools. You're buying a lot of tools to make this happen, because you've got to be so on top of things. You've got to have the equipment, the hardware, the tools to be able to find charts that are moving. And we're looking at this chart because it worked out. The reality is, I wish I could erase a candlestick. I really do. The reality is, you don't know that candlestick is right there. You don't really know that candlestick is right there. You maybe know those are there. You're waiting for it to move, and to get in on this candlestick, it's too much work. And to get in this one, well, now you're too late. You're beating yourself up. So allow it to work, and then look for those rests. This is where the 3/8 trap below the highest high in the past 5 days. That's my personal favorite over the 3/8 trap. But the 3/8 trap is much more mechanical. In some ways better for some traders. For other traders, below the highest high in 5 days, you might like that. It's going to find the same. There's many crossovers on those below the highest high in the past 5 days. That just tosses a wider net. You don't catch bigger fish, you catch more fish is all it is. But you do not catch bigger fish, just more fish. And that's what I like to do. But for some traders, a 3/8 trap, that's the place to be. That's excellent, top notch. And man, anyway, just perfect there. So let's see. Rob, you put out CMT. What's your question on CMT? You ask a question and we'll talk about it, okay? Will there be recording? Yes, it's being recorded. Yep. Let's look at Dix here. Look at Dix. Look at that. Rally up. Look at that pullback. My, that's pretty. Let's come over here. Look at that. I'm making sure I'm flagging that. Wow. That's a nice chart. That Dick's Sporting Goods. That's right there. Bingo. Perfect. Everybody see that? Anyone understand or doesn't understand? Look how, I mean, this chart's bullish on this pullback. This is not a bearish pullback. This is bullish. And here we went below the T-line and back up. To me, that is see, what something else you have to understand too. This is not you and I. I hate to burst your bubble. You and I aren't doing this. This is not us. This is big money. This This is stupid money. This is the kind of money that is stupid. I mean, this is stupid money, okay? I say it's stupid money because it's not mine. If it was mine, it'd be smart money. But this is stupid money. It's not you or I that does this. So, stupid money buys it. Now you get a little pullback. One thing, I don't know if you know this, but stupid, by the way, stupid money is a lot of money, right? That's more money than I have by, I don't know, 100,000 times. So stupid money, they can't buy everything at one time. If they did, they would be buying against themselves or trading against themselves for quite some time. So they buy in lots, is what they do. So here we have stupid money up. We've got some profit taking going on. And all of a sudden, there's the reversal. Below the T line, above the T line. Boom, boom, just like that. Happened in one day. It can be a couple of days. Just a second. I apologize. I sneezed. There was no way I could get the mic turned off. Woo, crazy. So anyway, that's a very nice chart. I hope everybody can see that and understand that. Okay, if you have any questions, please let me know. Please. Let's see. Rob. Let's see, Rob. You were looking at CMT. What was that CMT? The trend from beginning to year trend steps up, not now. The trend from beginning of the year. I'm not sure what you're asking, Rob. I apologize. I'm not sure what you're. Oh, maybe that's what you're. Okay. Maybe now I see what you're looking at. Yes. Maybe now I do. Let me see if I can try this. So, bottom left of your screen, top right of your screen. Is that what you're? Look at that trend. Now, for fun, I've never done this like that. Let's lengthen this out for fun. Let's just start with 100. Let's make that 300. I don't know. Let's see, what is that? What does that do there? Something like that. Look how that thing curves. Look at that thing curve right there. Holy cow. Are we on the 7? Yeah, we're on the 17. So I guess with that, look at that. I'm going to have to do some studying on this one. I like this. I like this look. I'm assuming that's what you were looking at there, something like that. If not, please. Oh, okay, great. Thank you. No, I think that's great. In fact, I keep looking at where we had the T-line cross to 17. That's one of my favorite trade setups, not using the linear regression, using the 17, where the T-line crosses the 17 and then pulls back and bounces, because it always pulls back. That's a no-brainer. Whenever you have a moving average crossover, price always pulls back, always. Price leads the faster moving average, and when it leads it up, takes a deep breath, and then it rests. It eats a Snickers bar, gets energy, and then it moves back up again. It's just a clockwork. But yeah. Let's come back over here. Thank you for that. Thank you very, very much. Take a look at C. Look how C did the same thing. And we rallied up and pulled right back in, and we did that bounce right off the T-line. Now, by the way, when I say bounce off the T-line, I'm not a to the penny guy at all. I'm really not. Members know that. If you're here for the first time, you probably don't know that. But trust me, I'm not a to the penny guy. So what I'm looking for is the low to be within maybe a 0.5% above or below. And most of the time I'm at 1%. So it can be 1% below or above the T-line. And that gets me close to it. That's all I want, is close. I don't want up here, and being that 1%, that gets me in there, okay? Would it be my DLTR? I don't believe I bought that. I did not buy that today, but yes, it would be. The only problem with DLTR is it has earnings. I'll show you another chart that doesn't have earnings, okay? That is the same but different. But this is a great looking chart. I almost bought it today because of this. The way it rallied up and the way it started to box out here, and then it dropped down, the sellers, and now what you have is the bulls. Buy the dip, hurry, hurry, buy the dip, buy the dip. Boom, they bought the dip. Now, again, today was a bit of a, today wasn't normal, okay? So please, please don't anyone think that today was, I wasn't going to say special. Today was very special. Just simply, it's not the norm, okay? Is any day normal? Well, that's true, Walter, yeah. But today was not even close to that. So, yes, I think that's a buy. I like it. The only downside to it is earnings in about 10, 12 days, something like that, to 29th. Here's a chart that doesn't have earnings, and it's kind of the same but different, and that's Dollar General. Dollar General has earnings in December, so this might be one. And you can see how it, well, this is actually a very nice one. Look how it's bounced up, bounced up, bounced up. It's moving sideways right now, but it's pretty much continuing to trend. And then we get this 3 days below the T-line, and then pop today. Pop today, okay? Let's see here. What else? What time is it? Oh, okay. Let's take a look at Disney. This is a chart that I'm holding. I did not buy it on this pullback. I bought it here. But I mean, if anybody was looking at it, this might have been one you were looking at. Maybe that was a buy for somebody. Like I said, I did not buy it here. I ended up buying it here, and so far working out so good. Still looking for it to move up. We're taking on the 50% retracement of this high and this low. We're taking on that 50% retracement right now, which happens to be the 200 period moving average. Above that, I am looking for about 97. And if you can get 97, I just don't know why you can't get $100 out of it. So we'll see. Yep, that's another nice little Fig Newton chart pattern right there, isn't it? So that's working out pretty good. Another one that Blink here. This is another one that we bought yesterday, right in here, and then today. Was not expecting this. Man, I'll tell you, I wish I could have said, boy, I'm expecting this to jump way up there. Afraid I didn't say that. Today was just one of those oddball days in your favor if you were a bull. If you were a bear, you got kicked in the teeth. So this worked out really nice, almost to target. May need to pull back before it gets there. And then another one is, I'll share this, Ford. We picked up some Ford, doing quite well on Ford right now, and we'll see how that works out. So let's see here. Hey, Jose, Home Depot. So Home Depot, okay, let's talk about gaps really quick. And I'm going to go to this chart, I think. If I can find my mouse. Nope. We'll go to this chart. Let's change this back. Let's put 12. There you go. I just want a simple, clean chart here, okay? So candlesticks are about building on each other. So if, that's the whole that's the whole thing about candlesticks. If you have a bullish engulf, the way to trade a bullish engulf is wherever we close on that bullish engulf, what we want is follow through. So it can open up below, it doesn't matter. It can open above, doesn't matter where it opens really. What you want for it to do is close above that though. And that's where we start looking for a buy, is that move above that line. And it can be on the first day, it could be the second day if you're into, waiting one day kind of a thing. That's what you're looking for. You're probably wondering, what has this got to do with Home Depot? It really has a lot to do with it, okay? Candlesticks are about building on each other, is what they are. There is no such thing as a one candle pattern. Zero. This is now a one candle pattern, period. You can't connect it to this one. You can't connect it over here. You cannot connect it over here. There's no connection. It lost its connection. It's gone. So when I see a gap, I've got to wait a day. I can't trade that gap. And honestly, I hear people get excited about gaps, and I see people trade gaps. The thing of it is, I never hear about anybody making money. Not compared to how much chatter there is. It gets in here and trades, day traders maybe, but not swing trading, because it doesn't have a candle to compare to. So waiting the next day is what I want to do. And then the next day, you've got a backstop here. So if you have a bullish candle, you have a backstop. If you have a bearish candle, you have a backstop. So if you have a bearish candle and we follow through this low, you don't want it. If you have a green candle and it jumps out of that high, you want it. You have a backstop. Okay, so with that said, let's go talk about Home Depot. I look at Home Depot here, and remember, when we look at a chart, we want to put as many conditions together as possible before you have a reason. The reason is to push the button to buy it. The conditions, you don't push buttons on conditions. You analyze the chart to find conditions. So let's put some conditions out here. Do you see an inverted head and shoulders? That's a pretty good condition to me. I like that. Are we trending up here? Yes, we are. That's a pretty good condition to me. We gapped up over the 50 period moving average. That's a really good condition to me. Ooh, I drew that line and just saw that. We gapped up over these highs over here as well. That's a good condition. See how we're putting conditions together? So now we want to trade this. And we should talk about bad things too. Above it is the 50 period moving, the 200, the dotted deuce, and the 500 period moving average. They're up there. So those are bad things. But those are just speed bumps. That's all they are, is just speed bumps. The price and trend is where you want to hang with. All this other stuff is just speed bumps. Resistance is just a speed bump. That's all it is. You might have to, it might be the kind of speed bump where you've got to stop and back up and move over a little bit. There may be a big pothole in the road and you've got to back up and go around it. Some roads you have to back up and take the next road over. That's all a speed bump is. It's just a speed bump is all it is. So with that said, I want to look at Home Depot for a trade. I think we've put together plenty conditions. Now we just need the setup. So let's just watch for that setup. I want to go look at Disney. I'm only looking at Disney because it gapped up. So what I did is I waited for the next candle. I now have a backstop. Now I didn't buy it I believe it was here I bought it. So what I want, because I am not a dark candle buyer, I am a white candle buyer or a green candle buyer. I rarely buy on a dark candle, rarely. So there's my backstop. Here's the candle afterwards. That was the candle I wanted to see, right there. When I see that candle, now I can be a buyer. And that's just what I did. Okay. Home Depot, same thing. Backstop. Let's see what that next candle is. And the next candle could be the buy candle. I can't predict what it's going to be. I can tell you that below 300, below this low, I don't want this chart. I don't want it at all. Okay. I hope that was helpful, and thank you very much. Hey, Vin, LMT. Short, I guess. I'm going to say short. I'm trying to find what would you do with it? It's below the trend indicator. Should you wait for it? Short? Well, that's a short right now, man. That's a short right now. I want to bear with me, everybody, okay? Bear with me. I'm going to do this again. And I'm actually very, very glad you brought this up. Because the whole T-line bounce works the other way, too. I want to do this one more time here. Like this, I guess. Okay. So this is the bullish. This is the bearish. Oops, let's do that again. Whoops. Let's draw it down here. Thank you again for bringing this up. So, bebop, a boot, beat, price, boom, down we go, consolidate, down we go, consolidate, down we go, down we go, consolidate. Right there, boom. There it is, right there. There's that T-line bounce to the bearish side, right there. Perfect. Again, thank you for bringing this up. Let's see, is this one of them? Look at SNY, right there. Big gap down. Look how we travel up. I'm not too keen on it. No really good reason right there. All of a sudden, is that setting up? Right in now. Right in there. Is that helpful, Vin? Should you dare to short this in an up market? I would not. Why would you want to do that? I mean, seriously, why would you want to go against the 800-pound ape? When that ape when you're holding a what do you call a bunch of, is it a bunch of bananas? When you're holding a bunch of bananas and that ape comes up to you and says he wants a banana, you don't give him a banana, you give him the bunch of bananas. You hand him the bananas. That's right. Yeah, why would you want to go against the market? And look, the market is bullish. Look, there's forever bears out there that will be forever bears. There's going to be forever bulls. It's going to be forever bulls. This market is bullish. And then we're going to cut it off tonight. All right. I'm going to get rid of everything here. Boom. Look, we have been talking about this. We have been joking about this since these lows. I'm going to put up the weekly chart. Since these lows here in October. And I have fought people tooth and nail. I mean, I've had people call me names. You guys, believe me, I have. Telling me I don't know what I'm talking about. This market is trash. This market is no good. They've given me political reasons. They've given me war reasons. They've given me Powell reasons. They've given me everything under the sun. I have maintained that bottom is in and that we're bullish. And we are bullish now. There is nothing bearish about this market. There'll be a time to be bearish when it's bearish, when the chart says so. Not because you're angry against the world or something like that. I'm not saying that you're angry against the world or something like that. But there are people that are. And like right now, trying to find a short, I just don't understand the reasoning behind it. I don't understand the logic behind it. I cannot fathom the thinking of it because the chart is not telling you to. Okay, I'm not picking on you, Ben. I'm just, I fail to see how there can be a winner shorting the market right now. I just fail to see that. So anyway, I'll get off my soapbox, all right? This is a bullish market, and I'll be the first one to say it's bearish when it's bearish. We haven't looked at this chart tonight, right? I'm going to try to find I've got them all goofed up. Let's look at this one here. Let's come over here maybe. There we go. That's kind of clean, huh? This right here, this is the best chart in the world. I'm going to pull price off. There we go. That's the best chart in the world right there. And I think everybody should have that chart. And just when the dots are red, that's the time to be short. When the dots are green, that's the time to be long. There will be those times when it's up and down, choppy up and down. There will be those times. This is what, this is part of a trader's dream right here. That's what this is. And that's where you want to be short. This is where you want to be long. I wish I could follow my own advice sometimes. This is long, that's short. It's a no-brainer. Red, green, red, green. We are all trained to, I've got grandkids that's we had some grandkids just this past weekend, and one of them is he's about 2.5. What does a red light mean? And in the cutest little grandbaby voice, stop. What does yellow light mean? Slow down. What does green light mean? Go. I'm serious. Even a 2.5-year-old can say, stop. And I'll bet I could teach him short, long. I bet I could teach him that. I really do. So anyway, okay. All right. Market's bullish. I guess I made my point. Hey, I want to thank everybody for being here. All right. It's great to see everybody. Thank you so much. True story, Malcolm. True story. I'm not sure maybe I said hurry up or something like that, go faster. My wife reaches over and slaps me on the arm. Don't teach him that. So, anyway, thank you, everybody. Thank you very, very much. Trade smart. I want to say trade for profit, but shoot, everybody does that, right? Trade profit's going on the way up. For somebody that's new here, if you've never thought about doubling your account in a real way, everybody dreams of doubling their account. Everybody dreams about tripling their account. I probably should have talked about this in the beginning. Everybody thinks about that. Believe me, everybody does. And but if you would like to consider how easy it is to double your account in a real smart way, you might want to think about that. And but there's a way to do it in a very smart way, and it's very, very doable. Many, many, many people have done it. Okay, I've done it. I'm in the process of doing it to another account, or for this year, I guess. and I'm not, I don't mean to say special about that. There's a lot of people that have done that. A lot of teachers, educators that have done that. A lot of traders have done that. But they go about it in a very smart way. And that is one of the keys. Very smart way. So anyway, I got to go. Good night, everybody. Ed posted a link up there to the doubler. Oh, thank you, Julie. I've got to go take care of my voice. All righty. Everybody take care. Have a wonderful, wonderful, wonderful evening. And we'll see you all tomorrow, okay? Thanks a lot for being here. Good night.